What's going on, guys? It is your favorite mortgage lender, Abdel Khawatmi, Got Mortgages, coming at you guys live, actually from my home office. What I'm going to talk to us today, we are going to go over a lot of different topics of what do we got going on the market, what has happened. Now, before I dive into that, first off, I want to wish everybody a happy holidays, Merry Christmas. Want to kind of touch base a little bit in regards to this is actually a market update I sent to every single client and every single referral partner of ours every Monday, giving us an idea of what's happening, what happened last week, what's the expectations into next week. It's a perfect time to kind of kickstart. We will be doing this consistently every single Monday. Now, what happened last week? We saw that inflation was slowly getting to the Fed's goal of 2%. We also saw that existing home sales at the same time were actually finally ending that 5-month drop, the 5-month skid. We're seeing new home sales, although they did plunge to their lowest level in a year, not necessarily uncommon around these times, improving housing conditions. We all know the consensus has dramatically changed over the last few weeks when it comes to housing. There was always a little bit of a scary point at what point, right? There was always people buying. I'm a firm believer in that. But at the same time, we did simultaneously see a lot of different professionals kind of hold off, right? A lot of professionals exit the business and stuff like that. We're going to dive in that. We're going to start seeing housing starts. Housing starts are starting to hit a 6-month high. And that is the part that I'm really excited about, is to start seeing builders have the confidence to now start. I believe permits is the highest it's been in that 6-month time frame. I think it was May, dating back to the number of new housing permits filed, which again, this all comes down to basic economics, supply and demand. And we're starting to see that. And then we saw a slight downtick in terms of initial jobless claims, which is expected into the holidays, right? Now, we saw inflation inching closer to the Fed's 2% target. That's crucial. So the PCE report, that's the personal consumption expenditure report, that showed that headline inflation actually dropped by 0.1% for the month, which is great. We're showing a downtick. We're starting to see that year over year reading now read from 2.9 to 2.6. Crazy. Literally the tale of two, I tell you guys, when we talk about these things, because we saw at one point interest rates were significantly high. They started shifting down. The exact thing is starting to happen now because of inflation. With inflation going down, we're going to simultaneously start seeing that as well. Now, again, the year over year reading went from 3.4 to 3.2, the lowest it's been in 2 years. This is awesome, right? You guys can kind of see here again the graph. The headline year over year is 2.6 core, which is usually what we look at. Core PCE report is at 3.2%, showing that decline. So again, what does this all basically mean? Inflation's significantly going down. We're almost at 7.1%, guys, almost a year ago. We're literally at essentially a little over a third of that reduction, right? Then again, we're starting to see, if we took the last 6 months of readings for core PCE report, we're at 1.85, which is below the Fed's target of 2%. That is huge. So I don't think this is necessarily going to be a consensus where we're going to see interest rates maybe shift or anything like that. If we keep getting this friendly data reading that we've been getting, this is certainly going to work to our favor in terms of the market continuing at the track that it's going, right? Now, again, like I always say, remember, the Fed has been hiking its federal funds rate, the benchmark interest rate, in an effort to slow down the economy. The whole purpose of this is that we're looking to curb inflation. Okay, so when the Fed hiked the interest rates, we can now give them a pat on the back, although they did take a little longer than they should have to actually do this. But we did indeed now concede consistency in terms of the employment market slightly cracked. We saw the consistency with inflation slowing down. Student loans coming into play is a massive one as well. So a lot of different factors that we can show. They hiked 11 times since March of last year. That's very, very aggressive. The federal funds rate was as high as 5.25 to 5.5. It was the highest it was in 22 years. Now, again, they didn't hike at the last 3 meetings consecutively. Normally what we'll see is after consistent rate pauses, monitoring the market, we will potentially see our first cuts, into the mid, or in my opinion, end of Q3. month 3 Q1, right? Now, existing home sales, again, we saw existing home sales actually was falling for about 5 months, which again is typical, right? When we start seeing craziness in terms of home sales, it rose by close to 1% in October to a 3.82 million annualized pace, which is always great to see. It was relatively flat, as you guys can kind of see, barely of a downtick. Relatively flat. I think it's going to start to see a lot more inventory. A lot of our referral partners are certainly starting to have a lot more listings start to come out on the market, which is definitely very favorable when we start thinking in terms of inventory and availability for our clients. Okay. So what does this basically mean? Again, the report measured existing home sales in November, likely is showing people shopping the 2 months before that, right? Sales expected to always pick up around that time anyway, right? Not a lot of people are generally moving throughout the winter time. And the latest weakness again still reflects that bidding process of what we go through. Now, new home sales did simultaneously do a little bit of a plunge, right? Which again is more or less statistical in regards to these months. Obviously, elevated mortgage interest rates kept some of the buyers last month, and that's a big thing. And that's something I actually want to touch base on. So a lot of people, at one point, I talked to so many different clients, on a daily. And if you have the ability to purchase a home with a slightly higher rate, I highly recommend that you take the necessary steps to at least talk to your mortgage professional and get guided along the way, because you may not have that luxury, when rates are high. If you do have the ability to qualify and it fits your budget, and you could, quote unquote, temporarily take a slight hiatus of a slightly higher payment with the anticipation that you're going to drop the rate. And I'm not a fan of the saying of marry the rate, date the house, or whatever it is. But it is true. Acquire the asset at a fairly affordable price. Thereafter, you'll have the ability to drop your payment, but you got the asset. Once you get the asset at a slightly higher inflated price, you're stuck with that asset, right? There is no going back. This isn't Macy's. You don't return it. We have improving housing conditions too. We all know that. Builder confidence. This is a big one. This is where I think we're going to start seeing that massive positive feedback. Builders are starting to feel a little bit of a higher uptick, right? November was a scary month with interest rates teetering close to 8%. So we're starting to see that little positivity in terms of that, which is going to allow that consistent steadiness for the market to simultaneously get attributed as well, right? Now, housing starts again did hit that 6-month high. That was something I was sharing with you guys. You could see here, right over here, that starts was 1.56 million housing starts were created and 1.69 constructions, along with 1.45 completions. So we're starting to see a little bit of a downtick in permits, which we kind of expected, but that housing starts, construction, and completions is a very, very big indicator. Single family permits at the highest level in a year. Okay. Now, again, the bottom line, lower interest rates and the lack of resale inventory has allowed us the ability to give us that strong boost of employment for construction. Initial jobless claims, once again, guys, pretty much flat, right? You're going to see that negative 2,000, but pretty much came in relatively flat. Which is simultaneously showing that, layoffs have been, halted. Kind of sometimes happens heading into the holidays anyways, but it does kind of give us that expectation of what we were looking for when we're talking about these things, right? Okay. Now, again, we're going to talk about what we're expecting. Obviously, this is a pretty flat holiday week. We don't get too much data, but we are going to get later on today, which I'll actually read into, home price appreciation for October, Case-Shiller, and the FHFA, right? So Case-Shiller is one that measures home appreciation, and that simultaneously will show us how our home value is starting to get calculated, right? Home prices are starting to consistently go up. They have gone up 5% in October, the largest increase of 2023. So if you heard me right, the largest increase in 2023 is what we found today when we got the Case-Shiller reading for October. We saw that consistency of a 5% appreciation. Remember, that means if you purchased a home at, say, hypothetically, $50,000, 5%, your house has jumped up $25,000. Home price have grown the fastest at a year as of this last month, okay? Now, November pending sales at the same time, we will be getting on Thursday, and then simultaneously on Thursday, we'll get the weekly jobless claims, and then we'll head into the new year hopefully with some craziness. We're starting to see that 10-year treasury yield was almost as high as 5%, which is pretty crazy. Dropped to as low as 3.89%, which is phenomenal, which is what we're really looking for. So what does this all mean, guys? Interest rates are going down. Buyer demand is up. We are definitely talking with a lot more consumers. We are starting to coach a lot of our consumers. Make sure you're in preparation to, first of all, get in touch with your financial advisor, get in touch with your tax preparers, with your CPAs, with your accountants. Hyper, hyper, hyper important that if you're planning on buying a house, you get in touch with a loan officer before you file your taxes. Okay. It is so crucial, especially if you own a property, in terms of your write offs for certain things, such as depreciation that can be added back. But repairs, really tricky to add back unless you could prove they're one time. I talk to so many different consumers who I wish that I could have spoken to them 3 months before, and that usually happens. Make sure if you're looking to file it, first of all, you're getting with a trusted tax preparer who knows what they're doing. And if you don't know, we have awesome trusted partners that we can connect you with. And you simultaneously want to make sure that any of those jobless claims, right, that you may have had, it's being done and being explained. I just had a closing today, really, really tricky, in terms of the consumer's employment history. We had to go back 2 years from his last gap that was more than 6 months. We had to end up going back all the way to 2018 because his last gap was over a year and a half ago. It was more than 6 months. We have to go 2 years back. And unfortunately, this client had a little bit of gaps in between. We had to source 6 different jobs. Was not fun. Partly, in my opinion, on my fault. I should have probably did a little more digging. When I asked him if there was a gap of 6 months or more, he said no. We get the VOE. It was 8 months. 6 and 8 is a big difference. But, neither here or there, we were able to get the job done. Clients were successfully able to go in the home. We got them a phenomenal interest rate, a little just under 7%. And they were able to simultaneously take advantage of their opportunity and accomplish home ownership, right? So as always, whatever you guys have, I'm going to be shooting these every single Monday. Any questions that you guys have, visit our website, gotmortgages.com. Abdel Khawatmi. I appreciate you guys jumping on and tuning in, and I'll catch you guys next week.